And that's something else that ends up happening for these reps, unfortunately, is that because they're focused more on a compensation model of delivering product or a business distribution model. They're not necessarily focused on how to elevate the advice that they give to help people to really make really informed decisions. And so I'm gonna get off my Primerica soapbox. We get onto a different actually, any of these three-letter acronyms could probably fit this. I've heard from other people who've been with these companies or no longer with them, that they would be taught, let's say, for example, and we've talked about permanent policies. Now, the thing about permanent policies, and it's a little bit contradictory, but in order to make a permanent policy really work, you have to put more money in it to really make it work for a given amount of death benefit. You got to over contribute to it. And this three-letter acronym would basically say, can you get started with the plan for $100 a month? And the person, yeah, we can do it. Do you think you could increase it to 250 in a couple of years? And you're thinking down the line, 2 years, well, I should be making more. I'll get out of school or whatever the situation is. Yeah, I could probably increase it to 250. Okay, let's write it for $100 a month. They write it on what is called target premium or less, so that they can maximize their commissions. They got a policy in place. The problem with that is that, are they going to be around in 2 years to go back to the client and get that additional contribution happening to keep that policy in force? And many times that doesn't happen. And so you're kind of lucky if that company has orphan policies, because those policies just don't have an agent, but at least the policy's in force.